Hey, it's Michael Saul, also known as Tiny. This is the market video for the week of June 23rd, 2014. So let's take a look at what happened last week in the market. Also going to go over some stocks as well as some futures contracts. So got good feedback last week. So I'm going to continue to do that. I'm also going to throw some stocks into the mix. So last week, coming into the week, I was looking for the market to trade higher. It looked like. So I was looking for us to trade higher. Sorry about that. I got interrupted a little bit. And that's exactly what we did. We pushed up. It was FOMC. It was also the Triple Witch. And we got a nice push up. We hit an all-time high on the SPY. That's the S&P 500. We didn't close there at the actual all-time, but we did close at a new closing high there. So that's the S&P 500. The Dow didn't quite make it to a new all-time high. Didn't close at a new all-time high, but it was close enough. The Dow has been lagging recently. The NASDAQ pushed up to a multi-year high, whatever it is, 14 years, whatever it is, and then pulled back a little bit. Still, this pattern here still looks okay. They all the indexes actually still look okay. We'll talk about that in a second, but it's a nice consolidation here. The mid caps, they pushed to a new high, also consolidating there. And the Russell, which had been lagging and is still lagging, had a nice push up and was actually leading for a little bit and did close at new multi-month highs, but still not at the all-time highs yet. Now, I do not believe that this rally ends. It doesn't mean we have to go straight up from here. We could work our way higher, whatever we're going to do. I do not believe the upside is over until the Russell hits a new high. So until we see the Russell hitting a new high, I believe that pullbacks or pauses are buyable. All right, I am still looking for us to move higher here. Sell in May and go away got broken. All right, I mean, the Russell, maybe if you sold in May and didn't go away, you made a couple of points, but I mean, no, it just got broken here. And we look like we are going to move out higher here. And it looks like the bulls are firmly in control and have a firm grasp on things. Does this mean we're just going to go higher for the rest of our lives? Of course not. I don't believe that. I believe that a correction is potentially setting up. I mean, the only one we really saw a decent correction, not a bear market, I don't even know if you would call this a correction, but I mean, let's see what we were down to make it. Let's see. So 120s down to, I mean, you got almost, 120 down to 107, right? So you got, 13 points here on a 120. Yeah, I mean, it was better than 10%, so I guess it counts as a correction, but I mean, there was really not a lot of hard selling here, and it looked like the bulls were just biding their time into jumping on board. So right now, looks like we are going to go higher. I am looking for pullbacks or pauses, and these are the kind of patterns you want to see. If you're looking for a pause, all right, even the SPY, getting a little bit of a pullback here. So that's what I'm looking for the foreseeable future, meaning the next week. Okay, I'm not sitting here going, "Whoa, to the end of the year." No, come on, one step at a time. Let's see what happens. If the Russell gets to that new high. I've been saying that for a while, that the Russell's going to get. Just because I'm saying it doesn't mean it's going to happen. Okay, but that's what I'm looking at right now. I don't see any warning signs up here. People will point to volume, and volume's a problem. It's been a problem for a while on the upside, and it's definitely bankrupted more than one bear trying to think there's a huge volume divergence. Let's get short here, okay? The bottom line is there is nowhere else to put the money right now in order to get the yield, okay? Bonds are, you could see here, bonds are rising since the beginning of the year. Okay, so as bonds go up, yield goes down. There is no real favorable place. And that's just bonds. There's plenty of other places that you could put money in order to grab some yield. But there's nothing here that's saying, hey, you know what? We need to we need to put our money here in order to make some money instead of risk it in the stock market. So I mean, people are thinking, hey, the stock market is the lowest risk. I never agree with that, because I always think that, even if, unless, I mean, I guess if you're playing the market as a whole, it lowers the risk, obviously, if you're playing an ETF or something like that, because you're not really affected by one company. But for a lot of people that are stock pickers, and there's of course always a risk that something can happen with with an individual stock or an individual group, etc. All right. So anyway, that's what I'm looking at for the market. Let's take a look at individual stocks. Google is a stock I want to focus on here because it has been lagging, but it looks like it's getting ready to go. Is this a cup and handle? I don't know. I guess you could call it a cup and handle here. I don't know if it's an official O'Neill cup and handle, but it has definitely the look of one. I like the way that it's surfed on the 50-day moving average. So, of course, confirmation is key. I want to see it if it breaks out, but Google is definitely one that I want to watch on the upside. Apple, post-split, looks back to the 20 EMA, see if it can rotate off of that. Surprised it hasn't hit 100 yet, so I'm still looking for that as a target. Doesn't mean it has to get there. Priceline, another big stock, had a really nice push up off of this 200-day test and the coil. Now it's on the 50-day moving average. See if it can rotate off of that. Netflix looks like it wants to try the highs. Amazon, Amazon has been struggling a little bit here. It held the 20 EMA, see if it can rotate up and try to get that 200-day. If not, you got the 50-day below as potential support. Goldman got off its butt. I was bearish on Goldman. I thought if the market were to correct, I was looking for Goldman to actually break down, but instead Goldman is actually acting pretty nice here. The level to get above is this 175-ish level. Was it 175.60? So you want to see if it gets above that. All right, so let's look at Bank of America. Now, this is an interesting one because it's basically sitting on top of all of its moving averages here. So you could draw the lines in here and you could see that it's pretty wounded up. I know that's not the right word to use, but it's an inside joke that I've been saying for many number of years. Yeah, I knew somebody once that actually used that term. It's all wounded up. So it's all wound up here. It's right on top of its moving averages. See if it can release to the upside or the downside from here. But obviously, if I'm looking for further upside, then I'd be leaning to looking for a release up. But you can never tell. When a chart comes down to an equilibrium point like this, you gotta be willing to watch it either way. LinkedIn, it's grinding. If we do get a correction in the market, which, like I said, I don't see right now, LinkedIn would be one that I would be watching for a short side opportunity because it's pretty much lagging here. But I don't like to fight the market, so if we do decide to go higher, and my opinion is correct that we're going to keep going until the Russell hits that high, then I'm not really looking to jump in on the short side. Twitter, we talked about this a couple of weeks ago, and it sure is taking its time, but it is getting the move higher. It filled this gap now. I wouldn't mind to see a little bit of a pullback or a pause, maybe even a pullback to the recent breakout point, and then see if it can get to these highs up here. That's a pretty nice level up here to watch, 47.09 on Twitter. Okay, so we already looked at bonds. Let's look at them again quick. Right now, they're surfing on their 50-day moving average. So what we can do here is we could bracket it like this. Okay, and then we could see if we could get a breakout either way from here. I like to bracket price whenever I can. Gold had a really nice week, basically one day, which was Thursday, with a really nice push up through the moving averages, through the 200-day moving average, and it offset this triangle breakdown. So kudos to Debbie, who is a friend and a longtime follower of the video. She was calling for a big bounce in gold, and I didn't see it. I saw this as the start of a a push down to test the lows, but instead, really nice move up here. And now, of course, we have resistance all the way up here, 1355. That's a way to go. There's minor resistance at 1332, so we want to watch. That's about 15 points from here. Silver, okay, also with a really nice move, and silver had been lagging, but that got in line as well with the upside with gold and crude oil continuing to move higher here. We talked about this last week that we were, watching for a pullback for higher prices, and there it is. I think we're going to get up here to 110, the 110 handle now. So, continue to watch for pullbacks and pauses. Soybeans, yeah, starting to pull in here. Pause here. Like to see if it can test the 200-day moving average. Corn, watch the 20 EMA for resistance. See if that trades lower. And wheat looks like it's going to test the lows on the year here. Really sharp move to the downside here. This looks like a bear flag. So remember, the grains are really nice contracts to trade if you're trading futures as far as range and volatility wise. So they're not easy. I know a lot of people say, oh, the grains are easy. Start with the grains. Yeah, I don't agree with that. I don't think any of it's easy. But, don't just throw them aside because, you want to trade index futures. Grains can be some nice trading instruments here. Like you see, here's the 5-minute chart. It gets a little obviously overnight, but once the day session opens, there's some pretty nice moves here. So just consider that to add to your arsenal. Lean hogs still consolidating here. Don't know what we're going to do on that. Sugar, 200-day moving average. See if this can break and go to the March highs. Coffee. Small little W here. The last W rocketed up here. This could be a small little W. Watch the 50-day moving average above. Again, I'm still looking for consolidations or pullbacks. I still believe the market is going higher until at least the Russell hits a new high. At the least. I'm not saying it hits a new high and it's over, but at the least the Russell hits a new high. That's what I'm looking at for this market to continue to move higher, okay? Any questions, tiny@stockmarkettrendsex.com. I apologize for these videos becoming really long. They used to be about 4 minutes. This one's going on over 3 times that, but I get a lot of requests to go over some stocks, to go over some futures contracts. We are going to be starting up the Sunday night strategy sessions. By we, I mean Paul Schatz and myself, getting that website set up. So once we start doing that, I'll probably cut back again on these videos, and you guys can always attend those sessions. We're also going to have a feature that if you register for the session, you'll be able to watch the replay automatically. Okay, no problems with uploading it and waiting and all that stuff. All right, so any questions, give me an email. You can also join the daily email list at stockmarkettrendsex.com. You'll get a daily email from me, and I will talk to you in next week's video or daily through the email.